Welcome back, Tribe. Got an episode here from Bravo's research. Says a once-in-a-lifetime economic reset
For
is
the
coming.
first time in over 30 years, we are seeing these two lines diverge away from each other. It's telling us that something in the financial system is beginning to break. The blue line represents consumer confidence in the stock market, and it's currently sitting at one of the highest levels of the last 30 years, even higher than the readings we had in 2000 that is notoriously known for having been an extremely euphoric period in the stock market. The white line is a survey from the University of Michigan, and it tells us how people are feeling about their own economic outlook. And this one is currently sitting at similar levels to where it was at the heart of the great financial crisis. So on one hand, people feel confident about the performance of the stock market, but on the other hand, they've never been more depressed about their own economic outlook. As you can see from this chart, this is the first time that we've seen such a divergence between these two surveys. This is a symptom of a problem that has extremely deep roots. And as we're going to see, it requires an economic reset before it can be resolved. This is a chart showing us real personal income growth in the U.S.
You will own nothing and be happy. We're forever digital slaves. The economic reset that's coming is life gets turned into a subscription. You ever notice that we don't own our music? We don't own your video games. You don't own your TVs. You practically get a cheap TV, but there's ads now that they're going to start playing on them. You don't even own the movies, the TV shows, everything. Everything is now a service. The software that runs whatever it is, if you're in some form of business, it's all cloud computing. It's all software. You don't even own the software anymore. Every single part of our lives is a subscription service.
Which is the amount of money people earn after adjusting for inflation. From the 1960s until 2008, real personal income followed a fairly steady trend of about 2.8% growth per year. This long-term trend gave people a sense of what to expect from their future earnings, and so the ability to make financial decisions based on these expectations. This is a concept called permanent income that was developed by Milton Friedman in 1957. As you can see, since 2008, personal income growth has fallen short of the long-term trajectory. Take someone in 1999, for example. Based on the historical trend, they could have had certain expectations regarding what their income would look like 20 years later. The reality is, for the last decade, the financial expectations that people may have had pre-financial crisis have never been met. Now, what makes this worse is that this gap has recently begun to widen. When we look at the growth trend in personal income from 2010 to 2020, we see that personal income has fallen behind this trend once again since the pandemic. Again, someone in 2015 was expecting a certain level of income by 2025.
And this is despite productivity rising. So workers are actually creating more wealth for the companies that they're working for and getting paid less. That's an interesting.
And is now seeing those expectations come up short. On the flip side, the US stock market has exceeded people's expectations. We can see this by comparing the percentage change of real personal income against the inflation-adjusted return of the S&P 500 since 2010. Real personal income has risen by only about 50%, while the S&P 500 has soared by nearly 300% even after adjusting for inflation. So on one side, people have grown used to being disappointed by their real personal income growth, but on the flip side, stock market returns have blown past most people's expectations. Now, most understand that this gap can't go on forever. The financial economy and asset prices can only diverge away from the
This is what they mean about the reset. I'm sure he gets into it, but it's the fact that we keep printing dollars because we keep raising the debt ceiling. That's your inflation. Your inflation is the dollar debasement. Means the dollar gets cheaper because the government has to print more money to pay for more shit that they're currently spending on, which is not what we voted for. That's the entire point. When you vote for bigger government, that means the dollar gets cheaper. When you vote for smaller government, less spending, constricting some of these programs, then the dollar gets stronger. We don't have a balanced budget. We're running a deficit. Do you guys know that we're going to, by next year, be in debt $40 trillion? We're on point to pay $1.5 trillion in interest alone. We added a record amount to the debt. It's unsustainable. The dollar lost 10% of its value, more actually now when you calculate it. Over 10% of its value was lost this year alone. This is with I want to remind you guys, for the left and the righters, this is with a conservative government. This is with Republicans. This is the small government party. We increase the budget all the time. This is why we're doing the government shutdown right now. is because they're trying to increase the budget. They've already increased the budget with the big, beautiful bill and all this stuff, or I should say, reorganize some things in the budget, but we haven't saved any money. And the money that we are saving is a joke. If you looked at Doge was supposed to save us trillions, that ended up cutting nothing. And what it did cut moved over to the defense budget. So I want you to understand that red or blue, they don't care about you. And if we don't tell the government to stop spending money, stop funding programs that do nothing for the average American, enough with the climate slush funds, enough with the woke policies, enough with the socialist policies that don't help us, that pay for people that shouldn't even be here, enough funding foreign wars, enough of that stuff, because we're literally going broke back home and life for us is getting more expensive simply for the fact that the government will not stop printing to pay for all those things and then some.
Real economy for so long. And this is where the concept of the Great Reset comes in. Some argue that this reset could come through a violent repricing of assets. Others believe it could happen more quietly as income growth somehow catches up to assets. So let's look at how and when this reset is going to happen. Quick reminder, we're celebrating our 5th birthday at Bravos Research, and we are offering a major pride ourselves on. It has been trending lower, falling from around 13% to just 4% today. Now look at what happens when we add corporate profit margins on top. While the savings of the average American has been declining, corporate profit margins have been steadily climbing. This divergence is extremely important to understand. Corporate profits ultimately get distributed to shareholders, and unlike wage earners, shareholders don't spend most of the income that they receive. Instead, much of it gets reinvested back into financial assets like stocks, gold, Bitcoin, private equity, or real estate. And we can see the results of this all around us. Home prices are at record highs. Gold has been hitting new all-time highs. Bitcoin is also trading at all-time highs and being adopted as a new financial asset. And all of this has been fueled by a backdrop of record corporate profitability. Inherently, there's nothing wrong with this process. It's a natural extension of how the financial system works. The real problem begins when this dynamic filters through to housing. Throughout most of the last 60 years, the average price of a home has been roughly 4 times the yearly household income in the United States. Since the late 1990s, however, that ratio has moved to roughly 7, essentially making housing about 2 times less affordable. Now, keep in mind, shelter is the largest component of the consumer price index. So this has a disproportionately large impact on people's budgets. If a larger and larger share of someone's income goes through to shelter, that naturally leaves less room for saving. And so pretty much nothing left to invest in assets like stocks, gold, Bitcoin, that have been compounding wealth for those who can afford them. So in practical terms, it means that many households remain stuck exactly where they are throughout their life. Their expenses rise, but their ability to build wealth through asset ownership doesn't keep pace. And we can see the impact of this on how people feel about their future. Back in 2000, roughly 75% of Americans said they had a good chance of improving their standard of living. By 2010, that had dropped to 50%, and today that number has fallen to 25%. That's a staggering shift in just a period of 25 years. And this has all translated into the highest level of wealth inequality in the US since the 1920s. This chart shows us the share of wealth owned by the top 0.1% of the US population.
And what people don't talk about, the 50s and the 60s, is the top rate tax rate was like 90-something% for the richest, wealthiest people in America. And wouldn't you know, that was when we had the most equality, the strongest middle class. People don't want to hear that today. Somehow the elites have managed to brainwash normies into thinking like, oh, taxes are bad for us wealthy people because trickle-down economics. If you tax us, we won't be incentivized to start businesses and make money. If you tax us, yeah, taxes are the answer. It's not hard to actually tax rich people. All their assets are here. All their money is here. All their economic activity is here. They have nowhere to run to. You can chase them literally because the United States can just sanction a country that allows them to try to run away with any of their money. It's a lie. It's a lie. What they really want is to hoard all the cash and then use assets, or I should say buy assets, to multiply their wealth. And that's what you see going on all around you. This is why you are getting fucked. This is why, for example, your houses cost too much. This is why, for example, your groceries cost too much. This is why regular products are starting to cost too much because the owners of these companies are pumping up the prices. You have no competition. There's no one that'll come after them. They make more and more money. There is nothing that helps you. Like we used to have strong unions even back then in the 50s, 40s, 50s, and 60s. Those have all gone corrupt and don't even serve the little guy for the most part. So you have no protections at the bottom. People at the top can just raise rates and keep them raised, prices on products, whatever. They're earning multiple millions of dollars, hundreds of millions. I love Elon, but he's got a pay package for $1 trillion coming up that they're voting on. And if he gets that, he's going to be the world's first trillionaire. A trillionaire. That's crazy. So at least he's doing something to further the world. But the rest of these billionaires that are hogging all their cash, they're just buying stupid shit. $500 million yachts, spending 50 plus million on weddings, shit that doesn't go into the pockets of the ordinary people. And the billionaires today don't even do what the billionaires did back in the day. Like they used to build hospitals, they used to have monuments, they used to build, like children's centers, libraries, stuff like that. That used to be named after them. They used to have real philanthropy, and that was a thing amongst the wealthy elite. Our wealthy elite don't do that kind of shit anymore. They hoard the money, spend it on themselves, build $100 million bunkers, God knows where, buying up half of a fucking island in Hawaii and all this shit just to get away from us, the plebs, because they see the writing on the wall and they need a place to escape to with their armed guards and all that shit. I'm not even being conspiratorial. That's what they're actually doing. But all of this to say is that when you allow these people such low taxes on extreme wealth and you do not tax them, and it accumulates, they have nowhere else to put it but into assets. That is why stocks have exploded, gold has exploded, all commodities exploding, housing, everything. And you can't afford to get into the stock market. You can't even afford to get a house. Cars have gotten too expensive. Everything that they tell you that is too expensive, it's just too expensive for you because all the wealth has been concentrated in the hands of a few people. And they're figuring out just how much they can squeeze each and every single American until they actually break. So that's what they're testing right now. They're just pushing the line in the sand forward, stepping over it more and more, next line, next to see like where is the absolute breaking point of the United States middle and lower class. That's what they're doing right now. So far, we haven't reached our limit yet. More and more people are struggling. You're seeing more and more videos of people saying how bad they have it and what they have to do to survive. Or going without eating a meal, not turning the lights on, eating from their children's plate if their children don't want to eat. Crazy shit. And these are people with jobs, not just like random homeless people. People that are forced to live in their cars and shower at gyms, just to go into work clean because they can't afford, for example, or had the water turned off at their place or the electric, or like the craziest shit that you're reading online it's insane. And when you put it all together, we're watching our government that literally sold out to big tech, billionaire. We live in an oligarchy that's literally America's for sale. It's being picked apart by foreign interest and the wealthy elite. That's what's happening here. It's insane.
This is the quote-unquote reset that many people are looking for, that somehow we see wealth inequalities come back to where they were in the 1960s, something similar to what happened during this period right here where the wealth inequalities of the early 1900s were completely reversed and led to one of the most prosperous.
Yeah, we want to avoid a Great Depression and also World War II. So it's like it took a Great Depression plus World War II to stabilize the economy. Okay, how many millions dead is that going to cost us?
First periods in U.S. history with a thriving middle class. If we put the S&P 500 index on top of this chart, we actually see that the peak in wealth inequality in 1929 coincided perfectly with the top of the stock market. Back then, rising asset prices, particularly stocks and housing, were also contributing to high levels of wealth inequality. The market crash that followed between 1929 and 1940 coincided with the beginning of a reversal in this wealth inequality trend, as you can see from this line moving lower. But this shift didn't just randomly happen on its own. A catalyst was needed, a trigger that forced what many would call the big economic reset. To understand what that trigger was, we can replace the S&P 500 with the top marginal US corporate income tax rate. In the 1910s, the top marginal tax rate on corporations was 0%. Policymakers then proceeded to push it to nearly 40% over the next few decades. Now, although there are many theories around what actually caused the Great Depression and the crash of the 1930s, it's likely that this rise in corporate taxes was one of the key forces that triggered it. This was economically painful. It squeezed corporate profits, it dragged asset prices lower, and it caused unemployment to rise. But it did help flip the wealth inequality trend that had been climbing in the decades before. And these high levels of corporate taxes did coincide with an extensive period of low wealth inequality in the US. In the 1980s, however, we saw the corporate tax rate come down. At the time, US corporations were under real strain. Profit margins were squeezed, and the economy was struggling in the early 80s as a result of high inflation and weak growth. Policymakers responded by cutting taxes and
high inflation and weak growth. That's where we are right now. High inflation, weak growth. The only way they're making money is by just jacking up prices, but there's no real growth. Demand has fallen off a cliff completely for most products in America.
In order to relieve pressure on businesses and get the economy booming again. And it worked. The economy accelerated through the late 1980s and 1990s, with strong growth and large appreciations in asset prices. Between 1982 and 1999, the S&P 500.
This is a bit of a simplistic explanation because he's missing a lot of important things. Like, for example, the Japanese yen carry trade, which is a infinite money glitch for free loans for the United States or anybody, really, but especially the United States. This is what fueled a lot of this growth in that time period at the cost of the Japanese economy. We essentially imploded Japan's economy and turned it into a zombie economy so America could survive forward. Look into that if you haven't. But the Japanese yen carry trade is essentially the Japanese bank has zero interest rate. You park your dollars there, or I should say you get your loan there in Japan, and then you take that and convert to dollars, and you have massive loans at 0% interest rate, which is obviously much cheaper than, getting money in the United States. The Japanese yen carry trade is the reason why America for the last 30 years or so, 40 years has enjoyed incredibly low interest rates, relatively stable economy, and a boom. That is why we had that Black Monday when the central bank in Japan was signaling that they were going to raise interest rates, and the market tanked and it went to shit. This is how connected we are to that. Our economy, when you really look into all these things financially, the banking system and the sector itself, it's all a scam. We are so dependent on little tricks and little loopholes to keep this economy afloat. We fuck with the numbers, we print some dollars, we rotate, dollars spent into other assets, which then we actually take money out of. So it's like double dipping in a sense. We're pretending the books are cooked completely. Then we're using the Japanese yen carry trade. That's another one of these book cooking, cheap ways of getting money that shouldn't even exist because, it's at the expense of Japan. But it makes us dependent on cheap money just to function. So what would happen if you erased 0% interest and Japan actually started, for example, taking care of its own economy and its own people? Because if they raised interest rates, they might be able to come out of the zombie economy that they're in. Well, that would absolutely fuck us over because interest rates for not only just the government, but everyday Americans would spike. And it could destabilize the entire West. People don't know. We're on the thread is so fine of what we have going on here. It's no surprise to me that people are starting to spend records amount on gold and starting to hoard hard cash, hard money, I guess you could call it, hard money like gold and silver. Silver started up a tear too recently, but gold has been on a mean run up. What's going to happen if we do have a great reset? Well, then all assets are going to shit, including gold. Just like it did in the Great Depression, gold fell also. Everything falls. So, and guess who are going to be the main winners? The same ones in 08, 09. The cash heavy with powder ready to deploy to snatch up assets that are absolute steals in that kind of market, which is why Oracle from Omaha is saving $300 billion in cash, I believe, was the last number that I saw quoted on headlines. So think about that. Berkshire Hathaway is sitting on 300 billion in cash, and people are like, "Why are you doing that? Why aren't you getting assets? Why aren't you?" Clearly, he knows something. Anyways, take care of yourselves, boys, because the next couple of years are going to be extremely choppy. And we'll see you on the next one.